I'm Jaden Sterling, and welcome to my podcast, Intuitive Investing. As an entrepreneur and someone who has taught people how to invest for 34 years, I have a good sense of what it takes to thrive as an investor. Each week on my show, I provide tools and tips, as well as interview world-class investors on their strategies. When your gut and research match, your ability to live a life of financial freedom is easy. Welcome to Intuitive Investing, and let's get started. Hey everyone, welcome back to another episode of the Intuitive Investing Podcast. I got my buddy on today, Sean Tepper. Sean, how are you?
Hey, doing well, Jaden. Thanks for the invite.
Absolutely. Sean, I'll read your formal bio. Sean is the founder and CEO of Tykr, a stock screener and educational platform all in one that helps you manage your own investments. He originally created Tykr in 2016 as a tool to save time when investing in the stock market. After 4 years, he made consistent returns ranging from 15 and 50% per year. Awesome return, Sean. In 2019, he started sharing this tool with retail as well as institutional investors, and everyone agreed he needs to turn this into a platform to share with others. Tykr went live in 2020, and now it's a platform serving investors from countries all over the world. Very cool. And Sean, we want to hear the backstory to Tykr because I know it, but share it with our audience, please.
Sure. Well, again, thanks for having me on the show. What you just did there is kind of like an overview, but we'll just go a layer deeper to hear the nuances in between. So my background is about 16 years or so in software engineering, mainly project management. I had an agency from 2006 to 2010, building software, building websites, and we did some video for a lot of small and mid-sized businesses. Didn't make any money because it was through the recession when everybody's cutting their budgets, and you take projects for 50% just to keep things moving. But we did get a lot of clients, so I had to scale up the company, add employees as the main reason. High liabilities means Sean doesn't get paid some months. But learned a ton about business. It was kind of like the MBA, if you will, of investing, to understand, because we worked with, over about 4 years, we worked with about 100 businesses. I pitched about 400, closed about 25%, brings us to that 100 mark. But with the 400 businesses, I had to kind of understand their model. How do they make money? How do they scale? How can we help them? And then you go and pitch, and in most cases I'd get a no and then just move on to the next. That training, again, was important. So we worked with like everybody from like restaurants, hair salons, car dealerships, car repair shops, manufacturing companies, SaaS, e-commerce, everything in between. And we did grow a bit in 2010, the last year. And fortunately, a larger company did approach us and say, hey, do you want to merge with us? And I was like completely burnt out, sick of this business. And I was like, absolutely, let's do this. So it was really about 5 employees, 5 of us, wanted a merger. There's no big check or anything like that. Like, hey, here's a check of $1 million and you get right off to the sunset. There's none of that. It was all debts and liabilities wiped clean. All right, that means a fresh start. So I stayed with this company about 9 more months, then kind of building up what's my next move. And I wanted to create a SaaS business because I was looking at like Salesforce and MailChimp and even Netflix. And I'm like, yes, I want to do something like that. But I didn't have any great ideas at the time that were kind of a competitive advantage, you could say. So path of least resistance, I went to work for large corporations. And at the same time I got into investing, I started actually with angel or seed round, which is finding new tech startups, investing my own money. I made some money, lost some money. It was kind of break even over 5 years. In parallel to that, again, with the corporate experience, that actually ended up being really good experience. I was working with like GE, Kohler, a little bit of work with Kohl's, another company by the name of Direct Supply. So some public, some private, but I got to understand, how do big businesses really market, sell, and operate? So never loved corporate America, but the training was extremely valuable. So this brings us to 2015. And when I was making no money at angel investing, I'm like, I could be swinging for the fences for the next 30 years. So let's take a step back and let's do things a little smarter And I looked right away at Warren Buffett and Charlie Munger. And I knew that these guys were generating consistent returns that can beat the market. And even Warren has said, you probably remember quotes like this. This quote really inspired me. It was, if I were just managing $10 million or even $1 million of my own money, I could make consistent returns of 50%. And I knew that Warren and Charlie, these are not gambling men. They don't use feelings or emotions to make decisions, which tells me, this is a software engineer in me, they're using some kind of logic. So the question is, what is that logic? So I went down the YouTube rabbit hole. A lot of beginner investors are probably in the same spot. Where do you start? Do you go on Reddit? Do you go on Twitter? You go on YouTube? You go in every direction, and it's chaos everywhere. You don't know where to look. But fortunately, I found a guy by the name of Phil Town. He wrote a few good books. I'll give you those books right now. So he wrote Rule One, Payback Time, and Invested. He wrote Invested with his daughter, Danielle. Now, with Payback Time and Rule One, he provided some of the calculus. And right away, I knew he was doing something different because he was looking at more data points than other investors out there, such as like your revenue, your net income, your EPS, your cash, your debts. Whereas other people out there would literally look at market cap and PDE ratio and then go make a decision. And me, with my software engineering experience, that lacks rigor. There's not enough there to really test the validity of that idea. So Phil's idea, I'm like, okay, this seems to make sense, but let's put it to work. Put his calculations into Excel, kind of add my own flavor with a point system. First year made 15%. I was like, okay, that's all right. Next year made 16%. This is around 2016, then 17. Then in 2018, what I did is I sold my ETFs. I became really confident because, as Warren teaches, Charlie teaches, and even Phil teaches, we should be investing in individual businesses if we want to build our wealth. I love, and I actually share the case study, your case study from when you were on my podcast, of Travelers Insurance. That was the big one you went into, and you went all in for a long time. And that's how you truly build wealth. So in 2018, I sold the ETFs and I'm like, let's go all in on individual stocks. I made 80% that year. And then my returns over the last 8 years or so have been consistently about 50%. Now, going back to Tykr, I had this Excel sheet, which was pretty clunky. It would take about 10 minutes to analyze one stock because I would have two monitors. I got to copy everything over from the income statement, cash flow statement, and balance sheet, move it over to my Excel sheet, and then it'd spit out the result. Hey, should you buy this stock or should you avoid it? So I could like set aside, let's say, half hour in the morning before going to the work and be like, okay, so let's knock out 3 stocks. Painstakingly long process. So it came to 2019, started sharing this with some investors, as you did in the intro, and everybody was like, yeah, when are you going to turn this into software to share with others? And that's when I'm like, okay, so 10 years later, I have my SaaS idea. Just a decade later, right? And it took about a year to build the first version, went live in 2020, which I will say, we're talking about before the show, needed a lot of love. This thing was not pretty, but I needed to get it out there. And my goal was I wanted to get 100 people on the platform for free. But in return, I want to get their feedback. What do they want? What don't they like? What am I missing? Right? All that good stuff. And yeah, as of today, we'll be live now 3 years. As of July 2023, we have a little over 7,500 customers and in about 50 countries. And we're really proud of this. And I always say this, like, if I talk about Tykr, don't take my word for it. Never, ever. Always go over to our Trustpilot to see our reviews, because we have a 4.9 out of 5. So a lot of people do like us. So yeah, that brings us to today.
Sean, it's such a great story, and I know what it takes to build a platform like yours. And so hats off to you. Congratulations. It's a huge journey. It's a huge undertaking. This year, I noticed you hit some milestones. So you're full-time with Tykr.
Indeed. So the catch is raising venture capital, of which we never wanted to, and I've been down that road with some of the angel investments I was part of. You get involved in VCs. Only about 1% of tech startups out there actually raise venture capital, so it's a really big feat. And you can end up wasting a lot of time going down that journey. So I'm like, let's do this right. Let's bootstrap it. So myself, and I've got two other partners in the business as well, a minority share, and we kept our full-time jobs. So I actually, up until this month, I over 3 years never took a penny to pay myself out of the business. Just put it all back in and kept my day job. So, yeah, but one full-time now. This is the first month. It was full-time as of May 1st.
It's an incredible journey. We did the same. We invested with my partners and myself $1 million into our platform. And then we got to a point where we were like, okay, we want to get to the next level, but we want to share what we're doing with people. So we did a Form D offering. And you all may decide to do that at some point too, because it's so nice to have 50 to 100 investors who are using your platform, who love it, who want to support you and help you get to the next level. And I think I recommend that. You should check that out.
Sure. Sure. Yeah. Well, we know at some point we may need to raise capital because the when a tech startup really gets moving, you have the momentum and it's inevitable. Let's bring on some people, make it a win-win for them. Ideally, what we're looking for is what we call, you probably hear the phrase all the time, smart money. So an investor that not only has the money but connections to where a lot of my corporate experience was with channel partners at the big business level. How do you find a strategic partnership that has an audience you want to get in front of? And then when they share your platform, you share in the revenues. There's a rev split. And that creates a really big win-win. So I'd love to find some investor that has those connections to maybe, let's say, a big broker out there or other fintechs. So.
Yeah. And, I was thinking about your platform. There's the analytical part and the financial parts. You're looking at different, financial levers of companies, making the determination whether it's a buy or an avoid or a sell, that kind of thing. Do people ask you all the time, like, hey, is this a trading platform or am I an investor? Like, how do you make that distinction for people?
Yeah, so when they join, we have an onboarding sequence that warms them up to the tool. We really, we're very gracious and say, "Hey, thank you for joining us." And there's a welcome video and then over the next 20 some days they get a new tip. Well, one of the first tips is Tykr used for investing or trading? We're right up front, it's for investing. People can go trade. That's not what our tool is for, but we set expectations. It can be very risky. So we let them know like investing is safe. You make your money work for you. Because I've had traders on my podcast, and they will admit it's work. You're still trading your time for a paycheck. It's a job. Whereas investing, you flip that equation and your money's working for you.
Powerful. And what are you seeing? Here we are almost halfway through
Mhm.
2023. Like, what are you seeing with investors these days? What's the biggest mistake you're seeing them make right now?
Sitting on the sidelines would be the biggest one, and we've we've had a lot of investors do that, and I have to remind them of events that have happened in history, such as the recession. Another case study of one of our customers, or not our customers, a friend of mine actually, he bought Ford Auto because they're the only company that did not take the bailout in 2008. They had the strongest balance sheet, whereas GM and Chrysler did. So he went all in. He went 100 grand into Ford. He was in his younger 30s. He's a plumber. He's a blue collar worker, and he turned that 100 grand into like 2 point some million in about a year and a half. And that was it. He was done working. He was like, I didn't retire because I still want to work, but he started working on some things. He was like online businesses and stuff like that. So it's like, well, financial independence in your early 30s by investing in a strong business. It's not too complicated. So I share that. I also share a story. This is a fun one about, and you can Google this. It's on CNBC. It's Ronald Reed. It's a janitor that built up a wealth of about $7 million. The question is, how does somebody who's making close to minimum wage build up a portfolio of $7 million? And the way you do it, by strong individual stocks. And this was through like the 70s and 80s, but I think he was buying Johnson and Johnson, GE, maybe Ford was in there, but businesses we're familiar with. And what he did is he had the discipline to keep buying more every month. He did not sit on the sidelines and watch. He had the discipline to keep investing every month. That's it. It's like you don't need to be making several hundred grand a year to be investing. You can be a janitor.
It's so true. I mean, anytime someone is gets past their fear, puts money to work instead of spending it, it and investing in the right stocks, that's key. I agree with you. Like, yeah, my story working at Citigroup, our parent company was Travelers, getting Travelers stock. I bought one stock during that whole decade,
Mhm.
turned 70,000 into over 1 million. I couldn't have done that if I was in a mutual fund or,
Correct.
any other type of approach. So I'm with you. I think it's full into individual companies. And Sean, I think I can't remember if I shared our platform with you before, but I want to show you real quickly. I think you'll find this interesting. We have this is our stock picker platform,
Mhm.
Sterling Stock Picker. And this is part of our, we added this feature called dashboard, and we're excited about this because it shows an individual investor how their portfolio is doing over a 30-day period. And then it shows the value of, whether it's up or down. And then it shows their stocks, their main holdings and the recent news. So just at a quick glance, someone can see their holding, if it's most watched in our community, if it's an industry best, and then our coveted ranking system, which is on a scale of 1 to 5 stars, 5 being our ultimate full
Mhm.
go into it, buy it now kind of thing. And then we give more supporting documents, news about the companies, what's happening with them. And then we bring in, this is kind of a neat feature that we've been doing lately, is bringing in the social media sentiment. So we're looking at the Twitter feeds and all the announcements around the company. And then in the background, what we're doing is using our machine learning AI to filter out all the like marketing messages and focus on what individual investors are saying about the companies. And we're having that play a role in our ranking system. Not a lot yet, but I think eventually it's going to play a significant role. And then investors can scroll down and see their daily gainers, what their stocks are doing. Here's one, Palantir is up
Mhm.
about 12.5%. Nice move today. Netflix, a nice move today. Sean, I'm curious, what stocks are you buying these days?
Well, I'm glad you pointed out Palantir. I've been holding them. I don't recommend getting into IPOs, but that's a company I've been paying attention to for a while, so I did, and now it's really starting to pay off. But I might, for context for the listeners out there, I'm all about a focused portfolio, and we teach this with our listeners is try to hold between like 10 and 15 stocks. I hold 10, so I hold Microsoft, Apple, Palantir. I do know a lot of different businesses and industries, but I know tech most, so that's why I focus on tech. Whereas I don't invest in pharma because I don't know much about pharma, right? So Netflix I don't own, but Fortinet is a big cybersecurity. Paylocity is a human resources software.
What's that?
PayPal.
Pay.
Paylocity. It's a PCTY or yeah,
There it
if
is.
you search by ticker, yep, Paylocity.
PCTY.
TY. Yeah.
Velocity Holdings Corp.
Yeah.
Let's run it through our stock screener. So we're
Sure.
looking at $171 a share, average risk, 3 stars. So
Mhm.
we've got a stock kind of below the averages, the SMA 200, 50, 15. But the MFI looks good at 33. So if you hold it, we're saying, yeah, keep holding it.
It exactly, and it's been an interesting space for tech because you've probably seen the same thing in your screener. It's like some of these tech businesses are kind of slowed down a little bit from a rating standpoint, but it's like the business themselves, that things are really gearing up for another big push.
Exactly. Well, I'm curious, what's your so it looks like kind of a sideways movement for the year, below the averages. How does your ranking system work with a company like this?
Yeah, so our system, we everything rolls up to the summary, which is on sale, watch, or overpriced, either green, gray, or red. And what rolls into that is you have a score of 0 to 100. Higher the score, the safer the investment. Paylocity is an 89. And then the margin of safety we calculate based on the EPS growth rate. The margin of safety of this one, though, is at 0. So this stock is considered a watch in this case. So similar to what you have here, hold.
Mhm.
Now, when this flips to, if we see an EPS like, as you know, every earnings report, and that's a big driver behind our platform is the earnings reports, is you have the expected and you have the reported. And if we can see Paylocity beating expectations a few quarters in a row, that's going to shift that fair value, which, our margin of safety from 0%, it's going to increase that. So that would flip the stock to probably an on sale. So,
Okay.
yeah.
We have I like that the earnings focus. We have under our winning stocks tab a section called stock rockets.
Mhm.
And those are stocks that are bringing in 50% and better quarterly revenue growth, have our top coveted 5-star North Star ranking, industry top performer. And look, today it's two, right? Two companies. So it'll never be a lot of companies that show up on this list, but this is the area I've made the most money with our software is so Snowflake. I'm curious, what does your software say about that?
Yeah, let's jump in there. They're a competitor to Palantir. Another one, because I know this space pretty well. So Snowflake, we're at 50 points out of 100, and margin of safety of also 0. But I'm jumping to the financial statements just to take a closer look. Um, EPS, do you have? No, I still see there negative 2.5 at the yearly and quarterly negative 0.64. I don't know if you have your financial statements within here.
So yeah, we do that. We do track all of that, follow up all of that. We track the revenue growth, the book value versus the stock price, current
Hmm.
ratio, how well a company is executing on their balance sheet in terms of the investments that they're making. But then we show their earnings and revenue each quarter, and it looks like they still have a good growth in that respect. But from a technical standpoint, the stock looks amazing. So
Hmm.
what we basically see or want to see is the stock price is above the EMA, all of the moving averages,
Sure.
and then the exponential, like green above red, right? Green is go, red
Hmm.
is stop.
Hmm.
So then that's telling us that the stock has a lot of support there. So yeah, we think this is something good to buy into right now.
Okay.
Snowflake. There we
And,
go. Well, we'll track it, Sean. We'll look at it today. We'll mark today's date,
and
and
we'll see what kind of returns.
we'll
Yeah.
see the returns by end of year.
I I don't know if I'd go into this based on Tykr, but I what we do is as well for context is yes, it's good to look at the numbers, but that's where a lot of investors can make the mistake is you don't want to stop at the numbers. As we teach the 4 M's, which is really inspired by Phil Town, is start with that. The first M would be margin of safety. Then you have the meaning, moat, and management. Margin of safety really represents all the math part. That's what Tykr does for us, and that's kind of what your platform does. But it's also good to pay attention to the meaning is the business model. How do they generate revenue? How many revenue streams do they have? If you know the industry, you can figure that out pretty quick. Like me, pharma, I don't know, but tech, I usually do know. Then you get the moat, which is the competition. Who are the competitors? How does it stack up against the competitors? And the management is the CEO. It's good to I always use the analogy, like, let's say you want to win a Super Bowl this year. Do you go look for, another quarterback that played in the NFL and maybe one of the Super Bowls? Or do you go down the street to look at your local high school? Like, who's going to be your winning quarterback here? Right?
That's such a good point. I've always said businesses are successful from a top-down approach. So if you have a CEO who, like, let's look at Jamie Dimon, for example. That guy's a worker. I mean, I remember when I worked at Merrill Lynch, he was working with Sandy Weil, closely with Sandy Weil. This was back in the 90s. And he said, hey, if you ever have an issue, call me. And I called him, and because I had a genuine client issue, and he called me back that afternoon. And I thought that was so impressive. The CEO of a huge company I don't know, at that point, I think it was over 10,000 employees. And he honored his commitment. So, it's just interesting when you have that level of responsiveness, that level of success at the top, how can, you really can't go wrong.
It makes a difference. And I know there are people, they have done studies on how does a Glassdoor rating, I know not every company out there is going to be on Glassdoor, but how do companies with high Glassdoor, because you have the Glassdoor company rating, which is a 0 to 5, and then you have your CEO approval, which is 0 to 100%. How do those companies perform in the stock market? And there was somebody, I was watching a video on YouTube. He just happened, he didn't care about any fundamentals, any technicals. He's like, I'm going to pick the highest, just theoretical, highest stocks, the top 10, and then top 10 stocks that are well rated in like fundamental analysis, but they don't have good Glassdoor ratings. And how do they rank up? And the ones with Glassdoor ratings actually performed a little better. And the reason is it comes down to if you have employees who are happier and they enjoy their work, they're going to put more effort into providing better quality service and products for the customers, which in turn can generate more revenue and more profits for the company. So, long story short, treat your employees with respect.
You'll get a better Glassdoor rating and maybe a better rate of return out of your companies.
That's it, right? It's not hard.
It's not super easy. So, Sean, you have an incredible background. You have accomplished a lot. Tell me your like super ninja style techniques of crushing it in business.
Well, I'm really big on time management. I do not subscribe to the whole hustle culture thing. I know there's entrepreneurs that's all about that hustle and grind, and I'm big on work-life balance. For example, I live in Wisconsin. I try to play golf. I'm not going pro anytime soon, but during the warmer months, I have a ton of fun with a few friends. Mountain biking, kayaking, fishing. I love being outdoors. So I try not to work more than 40 hours a week. And I'm pretty serious about that. Usually summer's about 35. So what do you do to move the needle? And I remember my dad teaching me something when I was much younger. He said, do that which generates revenue first. So what is going to move the needle in the business and focus on that, and everything else really becomes fluff. Because I find a lot of entrepreneurs, if they were to assess what they work on every day and then look at an Excel sheet and say, yes, that generates revenue, nor doesn't. In most cases, they're working on things that don't move the needle. I see this all the time. So I try to, when I wake up, I'm getting after it, focused on what needs to be done. Because as the day goes on, I notice I work slower. I'm a morning guy. So I hit the gym, come back, do a little reading, jump into work, and by about 3 o'clock, I'm like, okay, I'm running out of steam here. I need to just, is it wise to keep driving forward or just get out of here? And I usually just get out of the office. So yeah, just be smart with your time. That's kind of my ninja skill, is think about what generates revenue and focus on that. Everything else is really fluff that gets in your way.
That's so great. I love that. Everything else is fluff that gets in your way. It's so true. And when we focus on the fluff, we get more fluff, more frustration.
Yeah.
And yeah, like go for a run, go for a hike, get outside, right? Like if yeah, we're in BC, and our summer months, it's such a short window to enjoy, although the outdoors in winter has been awesome too. But I really like that. Thanks for sharing that. I think that's really good advice for people. Do those things that makes the cash register ring. You'll get that part covered in the day, and then you've got other aspects to grow the business. And so I'm just curious, what's been your biggest, because you're a software guy, I'm not, but we both built platforms for stock investing. From your vantage point, what's been your biggest challenge that you had to overcome building your platform?
Finding good talent, it's tough. Give you backstory here. I've worked with a lot of software engineers over 16 years or so, and some good, some not so good. It's just the way it goes with any trade. And with Tykr, the first version we built, I actually had to fire the team I was working with. They were good because I would leverage them for other projects in the past, like they're good at building WordPress sites and maybe creating a custom plugin, but creating a world-class SaaS, we quickly found out after 3 months this is way out of their league. So had to bring in another guy, and unfortunately with that, that person can't pick up where they left off. you kind of take a step back for a few months and then you get moving. And this next guy, again, worked with him in a lot of projects, and he was better at custom programming, but he was also not at that level to take it to the next level, you could say. And we were able to go live with that MVP, which I said needed a lot of love, but I knew like this is not going to work. So fortunately found our CTO Elgar, and he brought with him a team he used in the past, which are very good. So we did find the right team, but I will say this: whoever you work with, you have to be extremely rigorous with testing. And that's where I've spent, if I'm not project managing, I'm breaking software is essentially my job. So I try to dedicate time every day, time box. Okay, I'm going to spend a half hour here. Let's break it. We use GitHub to manage bugs. We have a board within that, kind of like Trello. And it's always adding some kind of bug, something, but it's like if you take your foot off the gas with that, your software can quickly go down path left or right in the wrong direction and just be a horrible experience for your customers. So in summary, there, finding good talent it's tough. It's really tough.
Yeah, we do that. We use GitHub as well for
Mhm.
ours, and I think it's when you're working with a team. What I've noticed, I've always been sort of a solo entrepreneur doing my thing, owning businesses and investments, but now working with a team, a group of people, it's been interesting because I often find by being that guy who wants to jump in and micromanage, it doesn't serve me or my
No.
team. So there's a lot of like letting go, right? Like, okay, I just know
Mhm.
and trust. I'm fortunate that I have two of the greatest partners. It's funny, one of my partners has the exact same birthday as my wife. Isn't that crazy?
Wow.
Same day, same month. So
Same year.
uh, off a few years, but
Okay. Okay.
yeah, you're right. Not exact same, but same day, same.
Okay.
And so I just noticed that, when you have partners that in a team that you can rely on, that it's so powerful because you completely trust, right? You can just each work in your field of genius, do your thing, and then let the partnership come together to create something pretty awesome.
Mhm.
So Sean, what's next for you? I know you incorporated some training for your folks in your platform. What else?
Yeah, so finally we launched our first course, which is titled Stock Investing for Beginners. And if you go to Tykr.com, there's the courses link at the top, but otherwise at edu.tykr.com. And what we did is we surveyed a lot of customers over the last year, do you want a course, number one, and two, what do you want it to be on? And with that, what do you want to learn? So we really relied on our customers to understand, and they came back with, well, we want to know when to buy and when to sell and how to invest your first $1,000, how to control emotions. So it's about 60 modules within, and some of them are short because I say up front, I don't want to waste your time. They can be 2 minutes on up to 10 minutes. But anyway, that's live. What's coming soon here is ChatGPT integration. I talked about that 4M analysis. Right now, we have a little fun checklist which people can go through on their own, but we're going to try to automate most of that with ChatGPT. And we've been doing testing on that because people get hung up on the moat part, like who are the competitors. Guess what? We've been doing testing, and with known businesses and not so well known businesses, it's like hitting 1,000. It's just incredible. So that's a big one. Another ChatGPT powered things to make our customers' lives easier. But the big one is we're launching the iOS and Android app hopefully this summer.
Awesome. Awesome. And just so everyone knows, it's TYKR, Tykr, TYKR. It's a phenomenal platform. Check it out. Sean's awesome, as you all know from this interview. But yeah, so I think do you have a discount code for folks if they're watching this? And
Yeah, I think it's save 15 is the code if you want 15%, and that's on all reoccurring monthly or yearly subscriptions. So uh,
excellent. And they go to tykr.com, or tell me.
that's it. Yeah, just go to tykr.com. There's a little, I think, start my free trial. You'd think being the CEO, I know what the button says. Yeah, yes. Sometimes you get out of the way with your team and they use the data to create some of the buttons and colors. But yeah, it says, yes, I want my free trial. And you actually, when you sign up, you get a 14-day free trial. You don't add your credit card. We don't ask for it at that point. We just want you in, use the tool, and then after 14 days, if you're like, yeah, I want to continue using it, then use that coupon code. If you have issues, just email support@tykr.com. We'll make sure you get a code that works.
Awesome. Awesome. Thanks so much, Sean, for your time, for sharing your high level expertise and educating us and sharing your big tips. I'm excited to see what's next in terms of your growth with your software and other iterations, I'm sure, down the road. And everyone check them out. We'll have the links and everything in the description of the podcast. So Sean, thank you again. Anything you want to leave the audience with?
I'd say if you're new and getting in, don't worry about how much money you want to make. Focus on one word, which is confidence. It's like jumping into the deep end of a swimming pool, and that first time is the hardest part. Buying your first stock is the hardest part. Just remember that mindset, and everybody's there. You're not alone on this. So just think about increased confidence, and then you can focus on building your wealth.
Such great advice. I mean, everything improves the more confident someone becomes. And the cool thing is it's a learned skill. So do your best but softwares like yours, Tykr, like ours, Sterling Stock Picker, that helps bring confidence to the forefront for an investor so they don't have to totally get lost in a very noisy field. So Sean,
Absolutely.
You're awesome, buddy. I look forward to having you back down the road, and we'll check out Snowflake down the road as well.
Let's definitely circle back on that one.
Sounds great. Thanks everyone for tuning in. See you next time.
Oh, that was fun.
Thanks for listening to this week's episode of Intuitive Investing. If you enjoyed this week's episode, make sure to subscribe and leave a review. For other helpful resources, please visit sterlingstockpicker.com. That's STERLING stockpicker.com to access free intuitive investing training.